In other words, the worst of the 12-month stocks, the worst of the worst, has been, Kari, the best of the best this week. Why? And do you think this can continue?
Okay, well, good question, Brian. And I would say it feels to us like a quant-driven trade. So the market hit up 20%, the S&P for the year last week, and it felt as if someone hit a button and all of the top-performing names began to come down. Growth names like PayPal, Visa, some of Facebook, stocks that were up 40 to 70, 80% started to come down, and the worst performing, you're talking about energy, the big banks, retailers, started to come. It felt like bottom fishing to us. I know people will feel otherwise, but I think this sort of trade can work for a while. It's hard to see it lasting for long unless those groups really perform fundamentally.
You know, Joe, I'll give you a couple of examples. Macy's, down 52% in the past 12 months. It's up 14% this week. The Gap, down 33% in a year. It's up 13% this week. To Kari's point, Helmerich & Payne, which is an oil-related company, Macerich, Schlumberger, they're all up double digits this week.
Okay, so if you're a trader, you get excited about something like that. On Monday, I thought the disparity between leaders and laggards gave you a great opportunity when you have names like you're mentioning that are leaders that are up 3% in a day. And on the other side of that, you have the software technology names that are down in some instances 5%. As a trader, that's great. As an investor, this is a healthy dynamic. This is exactly what you want to see. It's indicative.
It is healthy.
It's an indicative of a market that's going to move higher. The advanced decline line for the New York Stock Exchange reached an all-time high today. So finally, you have financials, you have energy, you have small caps participating once again. That's a very good environment. The other thing I'll just take exception to is momentum is out. No, momentum is not out. You've had a strong move for the 10-year yield. It's up about 30 basis points from that 144 low, okay? We don't want to walk too far away from thinking that yields are going to get out of control. You still want those technology names that have the organic growth.
But I'll push back a little bit, Joe, politely, of course, which is this. I mean, unless you've got new money coming into the market, you've got to sell something to raise the money to buy something else. It appears from just the numbers that people are selling some of the momentum stocks to buy the other stuff. So how do you say that momentum is not out?
To Kari's point, well, momentum will come back once again. Listen, momentum's starting to come back again right now as we're speaking. Yeah. To Kari's point, though, I don't know that it's people that are making this dramatic shift. I think Kari's right. I think it's the quants. I think it's the quants that are recognizing near-term momentum in financials, in energy, in small caps. Look at the move in the IWM. I shared with you.
A materials ETF? I'm just throwing out letters, Joe.
Look at the move in the IWN. I shared with you.
See what it is.
The Russell.
The Russell 2000. I'm not Jim Cramer. Give me a break.
My job is to make you look smart, not to make me look smart. So work with me here.
Well, try harder.
It's not a 3-hour show.